I have several examples of the big four, and if you take the big three, which is Trend Red, Power Red, and Swing Zion, those are the big three. Add Zip Red to that and you have the big four. When Zip Red is favorable, you have even better reaction, or a complemented reaction with price when you have Zip Red in a favorable condition to the other lines. The big three, this is Trend Red right here. It is down. I might add it's down strong. You can see that we have a nice red line going down in Trend Red. We have a fairly good line going down in Power Red. And we have Swing Zion is lowest. We like to see all three of these lowest. And if they're close to one, like if pink is close to Zion, that's still fine. And obviously if it's going up, that's great. If Swing Pink is going up, that's great. In this particular case, Zip Red is already moving up, and we have Zip Green down at 0. And we don't know that it's a pinpoint on this day. We won't see that till tomorrow, but we do have a expectation because Zip Red is in this BOC higher pattern that you see right here, and that is I might just take and mark that as a vertical line because I'm going to comment to that. I need to make a comparison of a couple other things because I'm going to come back to this group of or to this particular symbol. Now, on this one here that we're looking at, we have, I showed you the last one to give you the classic example of a trend of a big four down. In that Trend Red and green, Trend Red, Power Red, and Swing Zion were down and lowest. Oftentimes we get Zip Red down and lowest as well. So that might be the classic Power 4 down, but in this case here we have the same thing. Trend Red is lowest and down, Power Red lowest and down, Swing Zion lowest and down, and Zip Red is almost lowest. You can see Zip Yellow is under it just by a little bit, but it is down as well. In this particular case, we have a right leg W pattern, and there's quite a few right leg W's. It's a 3-day right leg W pattern. The bottom points are 3 days apart. And so also in this particular case, Trend Gray is up, while as red and green are down. You can see that from the, maybe if I go like that, you can see that Trend Gray is just barely up, which constitutes divergence between these three. It's great when Trend Gray is opposite of red and green. When it's up and red and green are down, you get a nice strong movement next day. When you add this as a divergent move to a number of other divergent moves, then it culminates into a gap up. And in this case, that's what we had happen. Now, also another thing to look for too in the price chart on the price green, we end up having a 24, red 16, and blue is 11. Now, red is closer to blue. They're only 5 points apart, whereas red and green are 16 to 24, which is 8 points apart. When red is closer to blue, it's indicative of a next day up. It's especially indicative if it's a crossover pattern. In other words, the day before the green vertical line, red was highest, and now red on the green vertical line day is under green, or it's not lowest, but it's under green. It was above green before, under green now. That's a crossover divergence. That, remember, divergence does not indicate direction. Divergence indicates strength. And so when we have strength, we know something's going to happen. We just have to figure out what's going to happen. And obviously, with all the right leg W patterns that we see here, we're pretty much like absolutely certain that it's going to go up, especially when everything is down low. Red and green are down under low, are down under the trend trio lines, and low under zero as well. We also have trend red in a down touch condition, meaning it's one of those conditions that we have to have in the trend chart in order for it to qualify for a gap. Well, it can qualify for a gap, that's fine, but we're not looking for gaps. We're just looking at the big three or the big four. But what it does tell us is that because it's in that down touch condition, it's going to go up the next day. And the down touch condition is basically trend red crossing under blue, and when it crosses under blue, that's the signal for the next day up, which is the case that we have right here. And so that is another, but that being said, it's another example of a piece of supporting evidence that indicates that the price is going to go up the next day. Again, we're not looking at a gap, we're just qualifying the move or the direction that we see. Because remember, DTVB was built on the price reversal recognition identification basis. That's what the premise of the system was. Or to say it in another way, we wanted to be able to find the cycle lows and the cycle highs, and we wanted to be able to identify not only when they turned around. I mean, there's a lot of people that can identify when they're going to turn around, but we wanted the ones with strength. And that there's two ways to identify strength. That's with line length of the indicators and with divergence. And so those two methods give us a key insight into the strength of a movement on the very first day that the cycle turns, either a cycle high turning down or a cycle low turning up. And so that's the essence of the framework around the premise with which the system was built. After discovering or after utilizing that premise, we then ran into the ability to find gaps with the three gap patterns. And so we take out of the 23 pattern types up, we take 3 of those. And these are the same 3 for gaps down. They're identical indicators. You have to have 12 out of the 22 in a 1 pattern gap or in a 2 pattern gap, but in either case you have to have at least 12. And actually it qualifies a little less than that. Sometimes you can get a gap with 9 or 10 even, but we use 12 as an example simply because it's the majority. 12 is a majority of the 22. The other one is down touches in the trend chart. You have 6 different down touches that qualify. Red, green, and gray can down touch the yellow, pink, and blue line, the 0 line, underneath the 0 line, or the blue line in this case. And the 6th one is a sky touch, and that's actually lines going up. And the day that trend red crosses over green and starts an uptrend, that's the crossover day. It's also identified as day 0. And then you have 1 day after the crossover, 2, 3, and 4 days after the crossover. So you have 5 days in which you can qualify for a gap through the pattern that we refer to as a sky touch. And then you have the 5 down touches, where trend red, green, and gray, down touch, pink, yellow, blue, and the 0 and under 0. Now, when in this particular case, the vertical green line has the trio under 0, so now we say trend red is down touching under the blue line. So it's either under 0 or under the blue line, same thing. So those are the down touches, and this example qualifies as a down touch. When you don't get all the qualifying conditions for the 3 gap patterns, you end up with a next day up condition or an uptrend. It's just basically a degree of supporting evidence that you find or you don't find. And so when you start finding information, you're going to get results. When you find more information, you're going to get better results. And when you find great amounts of information, all pointing in the up direction, you're going to get a gap up, as long as you have the 3 basic pattern requirements satisfied. Because it will gap up with the basic requirements satisfied. The high count in the indicator, identical indicators, and the down touch in the trend chart, and then of course the location patterns either in a we think of the location patterns as being a normal pattern, normal area. For example, the right leg W pattern, where you have 12 or more of those patterns, then the location of the power 4, the pink, blue, white, and yellow lines, and the power Zion, they're typically in 2 or 3 locations that often occur in the same location with the specific pattern that we refer to as a right leg W higher pattern. And that might be all 5 lines, the power 5, that includes the Zion line with the power 4. They're all under the power orange, or they're all above the power orange, or power Zion might be under and the power 4 might be over power orange line. So that's a normal way that you would see the location of the power lines in the right leg W higher pattern. And that is typical with most patterns. There's going to be a general area where the power lines are going to be when the day before the gap occurs. But I said all that to identify or to share with you that the gaps, when we have gaps, we have all that information. When we have the power 3 or the power 4 doing something, when we have the power 4, the power red, trend red, and power Zion all strong going down, the next day we are going to get a decent candle. But more importantly, when the power 3 are all doing the same thing at the same time, it's typical to have a 2 to 5 day uptrend. And so the power 3, the big 3 or the big 4 will tend to give us uptrends. Now, in this example we have right here, this on the vertical green line, it closed at 1682. The next day it opened at 2084. So it went up a little over $4. And that's, that would be like having 4 days going up at $1 a day. That's a pretty strong gap. And obviously it had a lot of divergence with it. I didn't even point it all out, but it had the right leg W patterns, which were big. And so there was adequate amount of information, or supporting evidence we call it, good conditions we call it. The conditions that make up the pattern are the required conditions. And so there's 3 types of conditions: the required conditions, the good conditions, and the extra conditions, or the other way we describe it is the supporting evidence as the 3rd type of conditions that we find. And we think of extra or supporting evidence as being attached to gaps, because if you find 1 or 2 extra pieces of information after you've found the three after you've found all of the requirements for the 3 pattern gap, then there's a really good chance that you're going to get a strong gap. But again, it's just in those degrees. You know, the more you find, the bigger the movement tends to be. In this one here, we have on the vertical green line, I'll expand this so we can see it better. Trend red has gone down underneath the blue line. That's one of those down touch conditions. It is lowest. Power red is lowest. On the green vertical line, Zion is not lowest. Pink happens to be lowest. And sometimes it doesn't make too much of a difference, but sometimes it does. In this particular case, we're not concerned with it because zip red is also lowest. And so it gives us a nice 3-4 day uptrend that occurs after that down touch. And we can see that coming in the swing gray. See how swing gray has been rising and rising and rising, and then as it gets closer to 0, the rise just gets faster, gets going faster. So that's an example of another down, or another big 4. I'm going to take the time to show a couple of others on this page, and that's the red vertical line. You can see that the red vertical line has trend red in a low angle down, power red in a low angle down. They're both lowest. Zip Zion is lowest as well, as is down as well, but in a bucket. But Swing Zion and Swing Pink is under Swing Zion, and it's not lowest. At this point, Zip Red, it's a leading indicator, it's going up. But one of the things that you find here is that the next day you had a red candle. You don't have, and you need, when you look at this stuff, you need to keep those short-term trend indicator lines in mind. In this example here, we've got the blue and pink and yellow climbing up under 0, and we know that once they cross over 0, they're going to go up higher. Usually, I mean, they can go up and then be flat and then go down, but they're usually going to go up. Whereas when you're looking at this red vertical line, you're already going into a downtrend, and so you're fighting against the trend itself. And so on the first day, when this should have gone, I mean, it did go up. You got a green candle, but when it could have, when we think that it's going to go up even more, we still have the trend trio fighting against us. The short-term trend pressure is still going down, and with that pressure going down, this would then give us a next day. In this particular case, the next day becomes a little short doji candle, and that's what you end up with. I wanted to match those up. I had forgotten to do that. I got 2 pink vertical lines now that convey where we're at. On the pink vertical line, you have zip green has come down to 0. Oh, the other thing I forgot to mention. Remember, on the red vertical line, when I was talking about what was happening on that candle day, on the red vertical line, you've got Zip Zion highest. And you know when Zip Zion is highest and going down, the price goes down. And what has happened here is we got a green candle, but it is underneath the previous close. And so really it's a stock that has gone down in value. It gapped way down and then it came back up. And so it has gone down in value even though you have a green candle, and rightly so, because Zip Zion was highest. And when it goes down, the price goes down. And so the day between the red vertical line and the pink vertical line, it goes down again. And we have and what happens? We get a stagnant little red candle there. that's probably about the same value from the day before. It looks like it's actually underneath the value from the day before. So it has gone down again. And what we have between the red and the pink, I moved that wrong, or excuse me, I moved it one day. Between the red and the pink line, vertical line, we have zip red and gray up and yellow and blue down. So there's another case of divergence indicating something is happening. Now, the biggest difference between the red vertical line day and the pink vertical line day is that we can see one indicator, the zip Zion, is telling us that things are going down. And also with zip on that day, with zip yellow at 16, it is not in the right place. We want that up over 50 if we could, but it's definitely not going. It's not going in the right place. Just 2 days ago, it dropped way down. But in any case, what we've got here is a on the pink vertical let me rephrase that. On the red vertical line day, we have a day when it looks like things could easily go down. And it wouldn't be something that you would, even though you're seeing the big three doing in a low, you're seeing the big three down lowest or almost lowest. It's questionable because of what the different how the different lines are moving. And with the zip Zion pattern highest, that really throws a red flag into the thing, and you'd likely wait. Then you wait till the pink vertical line day, and what do you got? You've got a red-green 2-day twin spike. I'll move the red line back to here. On the red line vertical day, zip red came down lowest, and 2 days later, zip green came down lowest. This is a turnaround pattern. The red-green twin spike, it's a 2-day. You can get them in one day separation and 2-day separation. This is a 2-day separation, and next day it's an up pattern. And that, in this particular case, influences our reaction. One of the bigger, well, I shouldn't say one of the bigger, it's a combination of a number of things, but keep in mind, on the red vertical line day, zip green is at 85, and on the pink vertical line day, zip green is at 0. So there's a big difference between what's happening with those coming into the stock. I mean, there's a mass exodus that's taken place in the last 2 days. And so on the pink vertical line day, boom, we can see that it's going up. And then similarly, we have, you might say, somewhat of a similar condition. I'll move the red vertical line over to here. We have the power red and the power and trend red going down. They're lowest. It looks like we got a big 3 movement. The swing Zion is not lowest. We got pink under it again. But we also have the swing gray line going down. It's above 0 going down, which is indicative of a continuation. We have the trend blue over here, highest and going down. And whenever we have that, things are just moving in the wrong direction. And all 3 lines, red, green, and gray, in the trend chart are all underneath the trend trio. So that would just tell us, even though we have a big 3 condition, and we have zip red in a low angle up pattern here, we just have a fairly, look at it, we have a fairly strong condition where things are just moving down. And look at our power yellow line here at the red vertical line. It's gone down 3 big days, and that's you're not gonna necessarily fight against that condition, especially excuse me, especially when the day before power pink was above 0, and now on the red vertical line day, power pink is under 0. But not only that, it's at a minus 2.4. So it went down very significantly under zero, as well as the power orange line. So usually the trend is quite obvious. We're going to continue thinking in that trend. The trio with blue highest is telling us that we're going down. Trend blue is at 22. It's a long ways from zero, and so it's really likely that the red vertical line over here in the trend chart is going to continue down. And it actually gaps up the next day and then ends its day at about the same price as it did where it is right now on this red vertical line day. But though I wanted to point those out, I spotted those, and those are examples of how and why it does not work. Here we have power red and trend red both in a very low position. In this particular case, trend red is at minus 56 and power red is at minus 5.8. Remember, power red can only go down to minus 6. So power red is almost at the very bottom of what's happening here. Trend red the day before has taken it's crossed over zero, it's crossed over the trio lines, and it's dropped down. Like I said, it went down to 56, but it started the day before trend red did at 67. So it went down, darn near 120 points. And so that's pretty significant in a down movement, which is indicative of, because it went down so hard, is indicative of it coming back up. And in the green line, we have the red, zip red, almost lowest. It looks like that red might be just a little bit above yellow in this example. Yellow is at 1.4, blue's at 1.45, yellow's 1.49, and red's at 1.53. And so technically zip blue is lowest. And if you don't know it, when zip blue is lowest, it can be a decent next day up. It's usually a next day rather than an uptrend, unless you have more collaborating evidence or corroborating evidence, as they say, like with the power 3 or the power 4. Zip Zion and Zip Green have held high on the vertical line day over here, which again, is just telling us that there's not too many people leaving the stock in either case, because both of them did stay high. So that can be a little deceptive sometimes, but it's easier just to identify with what the lines are saying, especially in your trades in and out of the stock, because you really don't know if it's buyers in and out of the stock or if it's a half a dozen guys just battling it out. So it's hard to say for sure. On the next one, we have trend. This is the one I showed you before. This is with trend red lowest, power red lowest, zip Zion, swing Zion lowest, and with swing and with zip red going up. Now I've got one other one after this. This isn't the one. This is zip red in a BOC lower pattern. It's going up, and remember, red and gray are leading indicators. Pink is a leading indicator. Pink, gray, and red, zip red, zip pink, zip red, zip gray, and power and and swing pink are all up in a low angle movement, which again tells us that the next day is likely to be up. You do have one key signal here in the trend or in the price chart. Price green is at 24, red's at 11, and blue's at 9. when red is closer to blue in a downturn like that, there's a greater probability that it's going to go up the next day, as it did over here when red was even under blue. And so when they're split, like here on this day, I'll move this over so you can see what I'm talking about. On this day right here, green was at 29, red's at 20, and blue's at 12. So 12 to 20 is 8, and 20 to 29 is 9. So the red is almost split right between green and blue. And what do you get the next day? Nothing. So there is something to having the red closer to the blue, especially when it's only like 2 points like it is here today. And remember, with red at 11 and green at 24, that's more than 100% difference. It takes 11 times 100%, or add 100% to it, and you only got 22 instead, and green's at 24. So the conditions that you find are critical. The last one I'm going to show you is this one right here, and this is with trend red down, power red down, swing Zion down, swing pink up, and red is in a BOC higher pattern. And notice the next day it goes up, and then the second day it gaps up. So, and in this case here, we have on the red vertical line day, that's a 2-day red twin spike. Because 2 day on the green vertical line, green's at 0. And actually, 1 day before, we have another. This is because the red line is down and not up. We have a 1 day and a 2 day red-green twin bottom or spike pattern. And that's indicative of definitely of a next day up, and sometimes of even more than that. But the big three is what drives the uptrend. Trend red, power red, and swing Zion. They're all down at the same time, and they're all going up at the same time. They're all they all form a BOC pattern on the same day, and that's combined strength that goes with that. So that's the idea behind the behind the big three and the big four in this I don't know how many examples I had. With those additional ones, I probably had about 7 or 8 examples. But it gives you lots of information on how to deal with big three patterns. It also points to the fact that a simple search of those can, search for trend red down, power red down, and swing Zion down, and you're going to find big threes. And you can easily find uptrends. So lots of information, lots of ways to find nice, strong movements. And ones with divergence will obviously move stronger. Remember, it's the indicator line length. And when I say that, I'm not only talking about indicator line length down, but indicator line length up. Remember, when trend red forms a BOC pattern, when it has a really long line, then that's a strong divergent strong indicator line that has a length that has moved down, creating a condition which is likely to have pushed it down too far, and its reaction will be to go back up. And in several examples, we get the up the next day, or a day or two later we might get a gap. So just an easy way to work a variety of opportunities for stocks to buy long, with the big three lowest, and the big four. I wanted to show you what the different positions that Zip Red could be in when you're dealing with the big three. And so we call it big four, but that's the emphasis is how you're dealing with the big three.